Hello, today I want to talk about adjustments that I have made in my portfolio after Donald Trump became president. My portfolio generally is about half Canadian index funds and the other half is generally big cap corporations. I buy mostly the Standard & Poor's 500. But after Donald Trump became president, I decided to sell a portion of my Canadian index fund and sell those Canadian dollars and buy US dollars and buy small capitalization stocks in the United States, mostly a index fund that follows the Russell 2000, and this index fund is the IWM. So I will explain in a second why I did that, but first of all, I would like to explain what are small caps companies. Well, in the United States, we usually classify companies depending on their size of capitalization, and small capitalization companies are the ones that are ranging from $300 million to about $2 billion, and then mid-cap companies are between $2 billion and about $10 billion, and then the big caps are the ones who are above $10 billion. But then there's another category which is called the mega caps, and these mega caps are usually above the $100 billion, and in the mega caps is the well-known companies that we hear so often about, which are Microsoft, Meta, Tesla, Google. All these mega caps are practically unique to the United States. If one mega cap company, let's say Microsoft, is bigger than the whole German stock market, or Apple is bigger than the whole France stock market. So these huge mega caps are just a creature of the United States. So first of all, why did I sell my Canadian index fund? Well, I like to be diversified. I know, in fact, that I have too many Canadian stocks. Canada is only 2% of the global economy, so I shouldn't have 50% of my money there. So that's on me. It's because I love Canada and because I feel like I'm contributing to the Canadian economy, so on and so forth. But in fact, I have too much, okay? But with Donald Trump in power, one of the things that he said that he would do is that he will impose a 25% tariff on Canadian goods. Okay, think about that. The United States is Canada's biggest trading partner. Without the United States market, Canada is just kaput. Okay, so if there is a 25% tariff on Canadian goods, the Canadian economy most likely suffer, right? So I would like to just take a little bit of risk off the table, take money out of my Canadian stocks and put it into the United States. But now you may ask, okay, well, why do you put that money in small caps in the United States? Well, first of all, I already have too much big caps. I have the Standard & Poor's 500, which, as you know, is full of big cap corporations. So I thought, yeah, okay, I could diversify a little bit more. I could get this segment of the US economy, which is a small cap. So I thought a little diversification would do me some good. But in addition to that, some of the economic policies that Donald Trump is promoting is lower taxes, okay, a higher tariff, and lower interest rate. Okay, so if those are the things that he wants to promote, then I think that small capitalization companies are the ones who will benefit the most. Okay, let's talk about taxes first. Okay, so most big corporations, they are already paying small taxes. Why? Because they have subsidiaries all over the world. Think of Google, Amazon, Apple. All of these people have subsidiaries in Ireland, in Cayman Island, in Hong Kong, in Monaco, in places where the tax jurisdiction is a lot lower than the United States. So they are already benefiting from lower taxes than regular US companies that are exclusively in the United States. So lower taxes, yes, they may benefit this big corporation, but not as much as they could benefit the smaller smaller companies who are just stuck in the geographical area of the United States. Now the next thing is a lower interest rate. Okay, so whenever there are lower interest rate, these smaller companies can borrow money and it's cheaper for them to borrow money, and they can expand, they can buy more equipment, more supplies, whatever it is, so they can grow faster. And then the thing about tariff is that if there are tariff, if competitors' goods cannot come into the United States, or if it's more expensive to bring those goods into the United States, then that means that the domestic products will be cheaper relative to foreign goods, and then that's what the consumer will buy. The consumer will buy the less expensive products. So then small car companies should benefit also from high tariff in the United States. Now, I don't agree with the high tariff thing, but that's the way it is. I don't make the laws, I don't make the policies, I merely react as an investor, and if I see that this is an opportunity, well, why not take it? Now, higher tariff, well, they have a drawback. They could create more inflation in the United States, but well, that's beyond my pay grade. I will see what I will do whenever there's higher inflation in the United States, but for the moment, I think this is my bet. Now, I would like to ask you the same question. How are you adjusting your portfolio to a presidency of Donald Trump? I know that a lot of people are investing in energy companies. I think the oil and gas will do good. A lot of people are investing in prison because there is all this mass deportation, and these deportees who probably will have to be housed somewhere until they are deported. But what are other shifts within the economies that you can see with this new presidency? I'm curious to know. Please let me know in the comments, and on to soon. Peace.